Now, talking about emerging markets, Indonesia in focus in the lead up to the election in July. The benchmark is up 50% this year, among the best performers in Asia in 2009. Let's get market perspective with Raymond Jin. He helps manage $1.5 billion as CIO of Manulife Asset Management. He joins us this morning from Jakarta. Raymond, good morning.
Yes, good morning.
Now, 2 days of losses notwithstanding, the JCI up, 50% year to date since its bottom in March. I mean, seems like it's factored in all the good news, including the likely re-election of President Susilo Bambang Yudhoyono. What do you think?
Yes, a lot of the good news has, in fact, been factored into prices, but we think that there could be some further upward surprises. Such as perhaps if the president were to win in the first round and not continue for the second round. Also, if commodity prices were to trend even higher from here, which is our belief, then they should put the JCI in with good legs.
How do you define good legs? How much more upside?
We're thinking more long term. Perhaps over the next 5 years, this market could quite easily double based on our projections of earnings growth and also some re-rating in PE.
And talking about PE, let's take a look at those PE numbers. We have JCI with a PE ratio of 22 compared with 16 for India Sensex, 15 for the Philippines, and 9 for Pakistan. What do you make of valuations right now?
But the PE numbers that we've in fact crunched puts the JCI on 14 times earnings this year. And it does put Indonesia the third cheapest market on that metrics. And given the growth profile of the Indonesian market and also the growth profile of gross domestic product, we do think that when you blend the valuation with the growth profile, Indonesia is relatively cheap compared to the regional markets.
But when you take a look at the rally, Raymond, it's pretty much driven by domestic investors. Are foreign funds back in the market?
At the moment, it seems as though foreign funds have kind of missed out on the rally so far. Some have got in. So if there was a correction, and it could quite easily pop down to 1880, we should be getting strong support from foreign investors that have essentially missed the rally, and also from
Raymond Welcome back to the trade. Oh, look at that. That's a pretty unusual picture for Sydney. You see the Sydney Opera House there, one of the most famous buildings in the world, and there's a building company at the center of attention on the Australian stock market this morning. Now, the demerger, CSR's sugar and energy business, raises a couple of interesting questions, like how did a company that grows sugar end up with a load of assets in building products? Well, here's an executive history for you. Founded in Australia in 1855 as a sugar pulp grower, it added building products in the late 1930s because it wanted to make use of the pulp produced by its sugar milling. It was a natural extension into chemicals and then metals as it built its two main lines of business. And now with today's news of the demerger, in some ways, is headed back to square one. As for the rally in CSR, the stock's up about 8%. It rose as much as 10% earlier today. Now, new data shows Asia's credit markets are a smarter bet for so-called negative basis traders. What is basis trading? Well, Bloomberg's Zeb Eckert is in a Hong Kong newsroom with an explanation. Zeb, shed some light.
Well, I'll try my best. Good morning there, Haslinda. We're talking about how you can profit from price discrepancies between bonds and credit default swaps. It's called the negative basis. So here's how. You profit as long as the difference between bonds and the cost of default protection doesn't widen. And new data suggests now's the time to try the strategy. Merrill Lynch says borrowing costs measured by yield spreads in Asia have fallen to the lowest since the Lehman collapse last September. At the same time, the cost of bond protection in the region division has fallen 165 basis points this year. Now, among the 50 investment-grade borrowers tracked in the market iTraxx Asia Index, more than half offer the investors the chance to make money. Now, you're probably wondering which companies offer the best chances of winning with these basis bets. Well, a few names to write down here. South Korea's POSCO, Seoul-based oil refiner GS Caltex Corp, Hong Kong's biggest phone company, PCCW, and Li Ka-shing's Hutchison Whampoa. Bloomberg data showing all of them are good bets for basis traders. And Haslinda, it's important to point out here there may be cheaper credit market values in the United States, but the credit qualities here in Asia are higher. We'll send it back to you.
All right. Thank you so much for that, Zap. Now, Raymond Jin helps manage $1.5 billion as CIO of Manulife Asset Management in Jakarta. Of course, we've been speaking to Raymond this morning. Raymond, let's take a look at your stock picks. Banking and finance stocks, among those you favor. Of course, expectation rates will go lower, yes?
Yes, we believe our rates could drop another 0.5% down to 6.5% by the end of the year. Our main reason for that...
Go ahead, Raymond.
Just the main reason for that is that inflation numbers year to date have been very low. I think it's less than 0.5% so far. And during the year, it could dip as low as 3 to 4%, but perhaps 5% by the end of the year. So we think Bank Indonesia has the ability to drop rates to 6.5.
Okay, in terms of banks, you like BCA, which is currently up, what, 16% year to date. I mean, take us through this particular choice of yours.
Yes, we do like BCA. It's been a slight laggard compared to the other banks. The main reason why we like it is it has the potential to grow its earnings much faster than the other banks. It's got an incredible deposit franchise, and it's a very low-cost bank. And when you marry that with the fact that they've got they have a very low loans to deposit ratio, it's really up to BCA how fast they want to grow. They're a very conservative bank, so they tend to choose not to grow too fast, but just the ability to grow faster and safely, that's why we like BCA.
Okay, another stock that you like, Indofood, up 90% year to date. Of course, this company makes palm oil products. You see more upside for the stock, yeah?
Yes, we do. And the main reason why we think there's continued upside is we've been looking at our own projections of profits for this year for Indofood, and we believe that the consensus number is just way too low, and we could see earnings upgraded between 30 to 50% this year. So that's our main reason why we think the stock will perform very well. In the first quarter results, didn't factor in hasn't factored in any of the great increases in crude palm oil prices, and that should come online in the second quarter, and that's when we believe analysts will start to upgrade.
Raymond, before we let you go, your target for the JCI by the end of the year?
Our target is between 2,200 and 2,400 for our target for the end of the year. It could, in fact, go higher, but that's what we're telling our investors at the moment.
Okay, Raymond Jin, Manulife Asset Management CIO, thank you for your insight on the trade this morning.